Hi, my name's James Lucas and I'm a real estate investor in training. My goal for 2019 is to purchase a 12-unit multifamily property using the knowledge I'm gaining from the real estate investing education that I'm watching. This week, we're going to look at the top 4 things I'm learning to look for when searching for my multifamily property. Last week, we looked at what is multifamily, net operating income, which is income minus expenses, and we also looked at cash flow, which is the income minus all of the expenses, including our debt service, which leaves us with how much in our pocket every month. That's what cash flow is. So this is important this week just because I'm looking to increase the value of the property that I buy. We can work out the value of the property by taking the net operating income and dividing it by the market cap rate. Now, the market cap rate is something that I'm going to look at in the coming weeks when I learn it a bit better, and I'll share that with you too. But all we really need to know is if the market cap rate stays the same, but the net operating income increases, then we increase the value of the property. And the way we increase net operating income is to increase the income and keep the expenses the same or reduce the expenses. The first thing I'm going to be looking for in an area that I buy property is job growth, and at least 1% job growth. Why would that be important? Well, if there's job growth in an area, the people that are already there are more likely to stay. And job growth also brings people from outside the area into it, which of course means more people, which means more demand for housing, which means more demand for my product, which is rentals. Let's take a negative job growing area. So if I've invested in that area, the likelihood is people are going to leave the area to find jobs somewhere else, and that creates less demand for my product, which creates a less safe asset. So by investing in a place that has positive job growth, I actually am investing in a safer asset. The second thing I'm going to be looking for is the competition in my area, and that is twofold. The competition of other investors, so how many investors are there doing what I'm doing? That tells me that A, this is a good place to invest because people are already doing it and having success, but it also lets me know that there's more competition on offers. So I have to create a more attractive offer, and I probably have to do a lot more preparation because the seller is having a lot more offers. The second part of competition is, what do buildings like mine, like the one that I'm looking at, what do they look like? What's the standard? What's the rent? So that I know, well, this is the standard that my property is going to have to be if I want it to attain that rent. The third thing I'm going to be looking at is market occupancy rate. So let's just cover what occupancy rate is. Occupancy rate is simply the ratio of apartments that are rented out in relation to the total number of apartments. So let's take an apartment block, for example. We'll take a 10-unit apartment block. If over the course of a year, 8 units are rented out, that is an 80% occupancy rate. And you can do the exact same thing with the marketplace. So however many places are rented out, divided by the total number of places available to rent out. And that gives you market occupancy rate. So if the market occupancy rate is 90%, I want the property that I'm looking at to be under that. I mean, anything under that, but preferably 75, 80, 85%. Why? Well, this is where I can create value in my property. If I know that the market can withstand or has a 90% occupancy rate, I know that my building should be able to attain that too. So if I increase the occupancy rate after I've bought it, that's going to be my job. What will happen is there will be more rent coming in. And as we know from that, if I increase my income, which is some of the rent, and I either keep my expenses the same or decrease them, then I've increased the net operating income. And of course, if the net operating income has increased and my market cap rate stays the same, like I said, I'll cover this next week in a video, then the value of my property increases. And that's what I'm looking to do, is add value to the properties that I buy. The fourth thing that I'm looking for is rents in the marketplace, average rents in the marketplace. So, for example, if the 12-unit building that I buy has 1 bed, 1 bath apartments, I want to know what the rents in the marketplace are for 1 bed, 1 bath. So let's say they're $600. The property that I'm looking at, I would want it to be under the marketplace rent. So under, in this example, $600. $450, $500, $550. And it's for the same reason as the occupancy rate. When I buy the property, I know that I can increase the rents to be in line with the marketplace. So I can increase the rents from $450 up to $600. Now what happens with that is more rent coming in, which increases my income, which, as long as the expenses stay the same, increases my net operating income, and overall will increase the value of my property. So those are the top 4 things that I'm learning to look for as I search for my 12-unit multifamily property and my goal for 2019. If you found this video helpful, or like me, you're a real estate investor in training, hit the like button, or if you have other people to share it with, other people who would be interested, hit the share button. If you want to follow me on this multifamily journey, so follow me as I learn how to invest in multifamily property, I'm going to be back every week sharing with you some of the things that I'm learning to safely invest in my first unit. So hit the subscribe button, and on a weekly basis, you'll be able to watch me on my journey. From fix and flip to buy and hold, we can provide you with comprehensive, detailed real estate investing education that you can access from the comfort of your home. Just check out www.realeducation.com.